and delegates tuned in today. As per our call, we have a hybrid format panel discussion in a very vital theme, Indian economy resilience check. So, as such, I find that people are still tuning in, and since we are a stickler for timing, we need to get started. And I am sure that in the course of the day, more people are about to join. Today is a Monday, and I'm sure that they have compulsions as well. So it's swelling the ranks, and we'll get going now to start the today's agenda. A warm welcome to all the panelists here. My welcome to first our panelist, Dr. V.K. Vijay Kumar, who is joining virtually. The group, Geojit Group Chief Investment Strategist and a very accomplished professor in economics. And right beside me, near to me is, Dr. Sachidanand Shukla, who is the Group Chief Economist of Larsen and Toubro, the infrastructure giant. So both the panelists will be sharing whole of, so this is in the format of a deep dive discussion, both of them being chief economists and being long time day-to-day followers of the happenings in the Indian economy. I'm sure that you have wonderful insights to get from them. And a warm welcome to all the participants who have tuned in, are still tuning in from inside and outside of the country. We have given this a very wider call beyond India also. We get engaged to a lot of banks beyond India. There will be a lot of I'm sure participants who are tuning in from other parts of the world. The SBI branches, be it Tokyo, be it US, Far Eastern and Middle Eastern kind of markets. Plus, we have the neighboring Eastern Rim countries like Nepal, Bangladesh, and so on and so forth. So, a warm welcome to all of them. And my sincere welcome to our director, Mr. Bangar Raju, sir. And so, warm welcome to you, sir.
Thank you.
And so, sir will be welcoming the gathering. And I would request before that, Dr. Vijay, to introduce Mr. Bangar Raju, the Director of State Bank Institute of Leadership, to the audience, please. Over to you, please.
Thank you, sir. It's my distinct privilege to introduce Shri Bangar Raju, sir, Director SBIL. Shri Bangar Raju joined the State Bank of India as probationary officer in 1995 in Bangalore Circle. He served in various assignments in advances, accounts, administration, relationship banking, branch manager, and systems. During the course of his long career, Shri Bangar Raju has worked as Chief Manager HR in local head office Bangalore, as AGM, served as stint in Chairman Secretariat Mumbai, worked as Circle Development Officer, DGM Operations, and DGM B&O at Nalgonda in Hyderabad Circle. He is now posted as Director SBIL. From the academic front, Shri Bangar Raju holds postgraduate diploma in Treasury and Forex Management, certified associate of IIBF, qualified as CISA, that is Certified Information System Auditor, from ISACA, that is Information System Audit and Control Association, qualified as FRM, Financial Risk Manager, from GARP, that is Global Association of Risk Professionals, US. I heartily welcome you, sir. Thank you.
So over to you, sir, for the welcoming the gathering.
Thank you very much. Thank you for the introduction. Good evening to all of you. It's a great privilege for me to welcome the entire the set of people actually who are participating in this online and also through physical presence. The world today is facing numerous challenges and uncertainties. Geopolitics and brittle and tenuous relations among the nations, and the exponential emergence of new technologies and inscrutable economic contours perfectly represent today's anxious world. Mindless pursuit of jingoism and hegemonism are the sources casting doom on the economic recovery globally. These tensions also add further to the pandemic upheavals now and then, economies are getting adversely impacted by the negative expectations given the rise of these red flags. Despite these challenges, there are few countries still who thrive with consistent growth thanks to their unique endowments like resources, efficient institutions, and visionary leaders, and also the quality of human capital. India, all of you know, that is a shining star among the nations to have these positive factors today. From almost a near collapse state of economy around 3 decades ago, India has scripted an inspiring story of tremendous growth and progress. India has efficiently maneuvered both internal and external turbulence, and it has become an embodiment of resilience today by efficiently handling the pandemic blues and also setting the economy on the recovery path faster. Today, we observe that India's stand on global challenges is well respected, and India, being the fastest growing economy among the nations in the world, has become the destination for the global investors. Of course, we owe a great deal of gratitude to our visionary leaders who have implemented prudently the economic reforms and created an environment conducive to inclusive growth and investments. With this background, we at SBIL, in association with Karnataka Bank and Dhanalakshmi Bank, are truly delighted to organize a deep dive discussion on Indian economy, a resilience check, with eminent panelists to share their thoughts on this critical topic. I'm highly thankful to both the panelists for sparing their valuable time and consenting to grace this discussion. Sir, I extend a warm welcome to both of you, Dr. V.K. Vijay Kumar, Chief Investment Strategist, Geojit Financial Services. Welcome, sir. And Dr. Sachidanand Shukla, Group Chief Economist, L&T. Welcome to you, sir. I'm sure that all the participants and audience will immensely be benefited by this deliberation of this panel discussion. I appreciate the efforts of our Dean, Dr. Krishna Kumar, and his team for roping in such erudite panelists and organizing this event. Once again, I extend a warm welcome to all of you. Thank you.
Thank you, sir. Thank you, Director, sir, for putting the clear notes on today's agenda. So a warm welcome to all the cohort of participants who are attending a leadership program here physically in SBIL today, and who are all have the benefit of attending it physically here, both from Karnataka Bank as well as Dhanalakshmi Bank, as our director was telling. And also I find that swelling ranks is touching close to 100 now in the MS Teams. Plus, we also are on live stream in both social media pages of Facebook as well as YouTube of SBI. So there will be many watching there as well. So a warm welcome to all of them and those who could tune in today in this particular format of deep dive discussion, where we are going to uncover the resilience part. The resilience is the theme. Indian economy's resilience. So we will also try to involve most of the participants, whoever registered and all. We'll be also conducting kind of polls, to understand how do you feel on many of these matters. So we will be, trying to keep it engaged. And thanks for all the questions that you have flagged off before even at the time of registration. We have factored in most of the questions, and in fact, as a moderator, what I'll be posing to the panelists in the discussion format will be, we would have factored all those points, what the questions that you had posed to us. So that is what I'll be relaying to them in short. So it is my distinct pleasure to introduce both the panelists, their profiles, and then we'll keep it going. My pleasure to introduce Dr. V.K. Vijay Kumar, who is a PhD and joined Geojit Financial Services in 2010 after a stellar career after retirement from the service as a distinguished professor of economics in Sri Krishna College, Guruvayur. Currently, Dr. Vijay Kumar is a chief investment strategist in Geojit. People who follow financial papers and others would know that he's a very, very regular columnist in almost all the papers, be it Economic Times or Vernacular or in Malayalam, in TV channels, day-to-day debates on a whole lot of themes. And also in the virtual media like Money Control and other places also, he often contributes his columns. So Dr. Vijay Kumar is well known for his articles on economic and financial issues and is a regular participant in discussions on economic and financial issues in TV channels and elsewhere. And as an academic, he has presented 76 papers in national and international seminars and 12 papers in international seminars. He writes columns on ET Online as well. Apart from that, ET, Money, Hindu, Indian Express, you name it, all kinds of publications of national and international repute he contributes. He's a resource person for various universities like Calicut, Kannur, MG University, all in Kerala. Dr. Vijay Kumar has made presentations in financial planning, investment planning, wealth management, India growth story, India capital market related topics in colleges, universities all over India. And he's also a go-to person on various contentious themes on economics. So a warm welcome to you, sir.
Thank you, Krishna Kumar. Thank you. Nice to be here.
Yeah, my distinct pleasure to introduce our another panelist, Dr. Sachidanand Shukla. Is a group chief economist in Larsen and Toubro, as I was telling you. He has around 25 years of experience spanning the corporate sector, capital market, financial services, and public policy. Prior to joining L&T, he was associated with the Mahindra Group as chief economist for 7 years. With Access, prior to that, he was also with the Access Capital, earlier known as ENAM, as senior vice president and chief economist. His key areas of research have been in industry, financial market strategy, development policy, program implementation, and impact evaluation. He has a PhD in financial economics from Birla Institute of Technology, Mesra, Ranchi, and a postgraduate in economics from University of Mumbai, and a PGDM in finance from KJ Somaiya with a gold medalist. He was a member of the Niti Aayog's Consultative Committee of Economists and has been a part of Planning Commission World Bank Study Maharashtra Development Report as an external expert. He is keenly associated with academia and is a member of the board of Somaiya's University, now the university under Mumbai, with the Private Universities Act, I guess, and has also authored a book on macroeconomics for BMS courses of Mumbai University, besides publishing several research papers and articles in newspapers. He has also been keen participant in research seminars, conferences, discussions on macroeconomic themes across various forums. Dr. Shukla is currently co-chairperson of FICCI's National Economics and Policy Committee and chairperson of Policy and Economic Committee of the Bombay Chamber of Commerce and Industry, and is also associated with the Confederation of Indian Industry and also ASSOCHAM. So, warm welcome to you, Dr. Sachidanand Shukla. So, pleasure is mine to get it kick-started. So, we are, 100 plus in the teams. We have about 30, 40 participants here as well. A lot of my faculty members are also joining. So, let us get going without wasting much time, because we have a finite time. He has a flight to catch back home as well. Okay, so we have all programmed it that way. Fine. So now coming to, and we'll try to keep it as simple as possible by engaging you as well. So I'll now first take the question to, and people who don't know about me, I'm the Dean and Head of Academics here, and I've been here in the State Bank Institute of Leadership now. This is the 5th year, and I'm primarily a banker turned academic turned leadership coach, and so on and so forth. So I try to, connect with the larger audience wherever there is an opportunity. So that is in short about me, Dr. N. Krishna Kumar. So let me keep it going. We will, broadly, we have divided the entire theme to uncork this resilience into 3. So we thought we initially discuss more about the macroeconomy part, the resilience, how it is being seen, in consonance with what is happening in the world, global economy, and how India is shaping itself part. Then we also know that when we are talking about business and the future, it is going to be largely digital-led and green-led. So, we might have come across terms like digital is business, business is digital. That was 10 years back or 15 years back. Now they're telling another jargon we call sustainability is business, business is sustainability. So unless, we are going to get tuned into both the digital-led part of it and the sustainability-led part of it, or what we call the green-led business part of it, it is going to be a lot difficult to even move the life systems and businesses. So this is all, connected hugely. So going by this, we thought to uncork this theme. Who would have thought, the word resilience, which we were using during the peak of COVID times for health-related resilience, have now suddenly become a term more to do with economy. Okay, so that is the kind of jinx we are at now, and resilience is coming to haunt us oftentimes, and we need to uncork this, understand the various, facets of it, and then that's the uncorking we will try to do through this deep dive discussion. So I'll try to take this and whatever which is not covered in the macroeconomy part of it and the digital and green-led part of our discussion, we will try to cover other vital aspects under one umbrella. So broadly, I'll be, deliberating, ping-ponging with all of them, the experts in that fashion. So it's fine, sir?
Absolutely.
Okay. So Jigmar sir, is it fine that way?
Perfect.
Okay, yeah. So we'll go that way, and so I thought I'll take the first, poser to Dr. Vijay Kumar. We all know that, at the moment when we apprise and take stock of the situation, the world is in a very, very, world economy is going through a big recession. All the big economies in the world are in recession, be it US or the bigger European economies like Germany, Italy, and all of them, Canada, and the hemisphere. So all these are facing huge recession. Not only recession, you also notice that many of them, if you look at Fed, they have been keeping the interest rates have been going up like anything. Whatever the printing press phenomenon that worked during the peak COVID time to lift themselves up are coming back to haunt the bigger economies. And unfortunately, it has also spilled to a lot of other economies, both developing, underdeveloped, and so on. Many of you might have also come to know that last Wednesday there was a report by UN which says that in 2011, 22 countries were having issues of debt-stricken nature. But that has now become, 57 countries after COVID. So somewhere along 57 countries are still tottering, with debt-related issues, unable to come out, or they are even unable to service their debt. You had so many examples, brink of collapse, and IMF people going after the Bretton Woods institutions to bail themselves out, and such countries queuing up in front of them are becoming more and more. So there is a very, very, kind of, in fact, that same UN report says that this doesn't augur well for the global good. You're talking about somewhere around, 300, of the 100 crore people that India has, 140 crore plus people India has. They have, the UN report says that 330 plus crore people are actually living in debt-stricken countries now, which doesn't augur well, when we are talking about resilience part. And, so somewhere along there is a lot of issues which we are facing, but somewhere equally seen is, we won't call it as, India has been a bit insular or totally, parachuted out of it or any such thing. That is a very far-fetched claim. It is not so. You might have also known that a couple of days back our exports have gone down, and we are still whatever wins that is affecting the recessionary tendencies in the developed world is affecting indirectly us also. But we are to some extent insular. Somewhere we are tempted to use the word. We are resilient to the global shocks perhaps 50 plus countries in the world are experiencing. So is this whole the calibration we have done, be it the way we have been managing our economy or our systems, or the calibration with which we were using our diplomatic route, or many of this when you look at from the prism of resilience, or how we are engaging with the larger world, including the Chandrayaan 3s and things like that. Is it true that somewhere we are catching up in the global committee of nations as a country which is sort of resilient? Would you agree to that, Dr. Vijay Kumar? Your views on that?
Good evening, everyone. SBIL Director, Mr. Bangararaju sir, my good friend, Dean Dr. Krishna Kumar, my fellow panelist, Mr. Shukla. Nice to be with all of you again. I've been participating in SBIL discussions and debates very frequently during the last more than 3 years now. Whenever possible physically, otherwise online. So again, glad to be here with all of you. Well, answering your question on the resilience of the Indian economy, there is no doubt that Indian economy has shown remarkable resilience in its recovery from COVID. Our GDP contracted by 5.8% in financial year 2021. Thanks to COVID. So that was one of the massive contractions among the economies of the world, minus 5.8% GDP growth. But then we quickly bounced back with 9.1% GDP growth in the next financial year, FY22. Of course, the base effect played an important role there. And then beyond that, in FY23, we again grew by surprising 7.2% growth. And this happened when the global economy was slowing down. And this year, when the global growth is again slowing down, India is expected to grow about 6%, perhaps by 6.4%, going by the early trends. So if you take the last 3 years, FY22, 23, and this coming year, 2024, India would be the fastest growing large economy in the world. As Bangararaju sir said in his opening remarks, India is a shining star among the large economies of the world, and we can be genuinely proud about that. India has been an oasis of stability, as the IMF chief said, oasis of stability in an ocean of turbulence. And more than this GDP growth, an important point that has to be appreciated is that we have achieved this growth with the macroeconomic stability. Unlike many other countries, including some of our neighbors who have gone to IMF for addressing their balance of payments issues, foreign exchange loan, we have $596 billion of forex reserves. And we have even helped Sri Lanka in managing their balance of payments crisis. So our macros are in very good shape. Our current account deficit at less than 2% is very much under control. It was in a little bit bad shape a couple of years back, but now it is very much under control. Fiscal deficit spiked because of COVID, triggered by the fiscal stimulus implemented by the government. But now we are in the fiscal consolidation path. It is coming down thanks to the buoyancy in indirect tax collections and direct tax collections. Actually, tax collections, both indirect and direct, GST and direct, have been above the most optimistic expectations. So fiscal deficit also is under control. Inflation, even though food inflation has been a bit of a bother in recent weeks and perhaps more than a month now, Inflation is under control, 4.81% inflation, which is the latest, is within RBI's tolerance limit, even though it is slightly above RBI's long-term target of 4%. So this macro stability is there. And coming to the banking system, since you are all bankers, I need not tell you this, banking system is in the pink of health. We are expecting State Bank of India's results shortly. I am expecting bumper profits, record profits from SBI. Of course, the bank people know better. And the banking system, I've been tracking the economy and the banks for more than 3 decades now, 4 decades. So I can say with certainty that the Indian banking system had never been in such a pink of health, whether it is capital adequacy or asset quality or the credit growth. We are in the pink of health. And our corporate sector is also highly deleveraged. We don't have the balance sheet issues, tinned balance sheet issues now. So the economy is very resilient and very strong. But then I will have a little bit of a difference of opinion from my friend Dr. Krishna Kumar, who has been a little bit over pessimistic about, I would say, the global economy. The global economy is not in recession. There is a slowdown. We have to distinguish between recession and slowdown. In fact, the US economy is in the pink of health. Last year, the stock markets also anticipated wrongly that the US will be tipping into recession by mid 2023. But the first quarter GDP growth of US has come at 2%, and that is 50% more than the most optimistic estimates of 1.3%. So the giant of the economy, the largest economy in the world, US $24 trillion economy, is growing by 2%. So the recession is nowhere in sight. The labor market is extremely tight. Unemployment is 3.6%, the lowest in the last 50 years. And in disinflation process, which has been slow in the beginning, is now catching on, and it has dipped to 3%. And more importantly, core inflation in US has dipped below 5%. Now it is at 4.8%. So in spite of this savage monetary tightening by the Fed, the economy is showing remarkable resilience. And it is this resilience of the US economy which is actually lending support to the growth in all other economies. Of course, in Eurozone, Germany has tipped into recession, and Germany is the only major economy to have that tipped into recession. Japan, which has been having more than 2 decades of two lost decades and recession for a long period of time, has bounced back. And the stock market is the best performing stock market in the world for the last 1 year, particularly this year in calendar year 2023. Therefore, there is no recession now. We don't know whether a recession will come maybe in the 3rd quarter or in the 4th quarter of this calendar year, because monetary policy always acts with a lag. We can't be sure about that. But right now, there are no signs of a global recession. Yes, there is a global slowdown. But if the global slowdown aggravates and if it becomes a recession, then there is no way the Indian economy can completely decouple. I will not use the word decoupling because if you look at the history of India's economic growth, we never achieved more than 6% GDP growth in India without a 20% growth in exports. And if you have a sharp global slowdown with a potential recession in the US by the last quarter of this year, well, our exports will take a big hit already in June. Our goods exports are down 22%. And overall exports, including services, is down 13%. That is when the US economy is doing well. So there is no way India can completely decouple. Of course, we are resilient. We will outperform all other economies. We will be the fastest growing large economies. But decoupling would be a too optimistic a word to use. So I will be slightly at variance with Dr. Krishna Kumar's thinking there. One more point I would add here before I conclude my opening remark. And that is, even though our economy is resilient, our growth is good, there is a deficiency in our growth. The Achilles heel of India's growth is that presently it is a K-shaped growth with the up market doing well. There is a premiumization. If you look at the results, if you look at the results of companies, it is very, very evident. Look at the automobile results. For SUVs, for premium cars and sports utility vehicles, the waiting period runs into several months now, sometimes more than 6 months for certain categories of vehicles. But if you take the June results of two-wheelers, the year-on-year, there is a 12% decline. So two-wheelers represent the rural demand from the bottom of the pyramid. And so also in other segments, also in affordable housing, the demand is a little bit sluggish. Whereas if you take five-star hotels, SUVs, the demand is very robust. So this K-shaped recovery is a deficiency as far as the resilience of the economy is concerned. I think we will have to address this problem as we go forward. These are my opening remarks.
Thank you, Dr. Vijay Kumar, and for clarifying most of those aspects. I'm sure participants who are tuned in are watching that, and a kind of K-shaped recovery. In fact, morning, in a session, Dr. Sachidanand was also telling the same things, right? The higher end of cars are selling more than the lower end, and including two-wheelers, right? So that kind of it's not broad-based as you see it. Coming back to to bring in Dr. Sachidanand into the discussion, more to talk with the supply chains. As we all know that, the global supply chains took a big beating during the peak of COVID time. We had a lot of waiting period, be it semiconductor, APIs, and pharma, and so all this was affecting our, local industries, including automobile sector and all that we were talking about. Now I gather that much of it, we have gone over that, and fortunately those waiting periods and all have been solved broadly. The international freight rates have come down, the timing of those things, the availability and other things have all supply chains have actually improved on one front. But also on the other front, though it has sound the ways of the best practices when it comes to supply chains. Corporates across the world are also looking at options of nearshoring or having risk management of sourcing from various locations and so on and so forth. And so you are trying, we talked about relocating from the Chinas of the world to the Vietnams and Indias of the world, be it iPhone manufacturing or in many such things. So these supply chain shifts, as well as the risk management part of it in the globality of economics, or whether the emerging economies like India has benefited out of it, and is there a resilience part that you are seeing in this? What is your view?
So good afternoon, everyone. Glad to be here. Thank you so much, Dr. Krishna Kumar and Director Bangaraju. I think a lot of positives that we've heard in the morning, and now glad to hear that from Dr. Vijay Kumar. You'll find very rarely that two economists agree on the same thing. Right? It's a rarity. And
left and right.
So glad that we agree on these things. As far as these supply chain resilience story is concerned, I think it is going to be playing out like a typical Indian divorce, right? Very slow and painful. If we all think, and we've been trying to, the world has been trying to move away from China, but every single day, every single incident, we end up discovering that the interlinkages are so strong with the Chinese in terms of supplies. So I'll just walk you to something that has happened just about a week back. The Chinese have imposed restrictions on germanium and gallium.
Okay.
Right. And now this is something that is people are discovering that we have so many issues with that, and because the entire EV chain, IT, AI, and things like that, and telecommunications, all of these are somehow linked to this. So this is not a very rare thing in terms of production and output. But if you were to look at what is happening is the Chinese have total control over the processing of that, right? And this is so different from what used to happen in oil. In oil, there is OPEC, for example. OPEC plus has 23 members, plus the US and Canada. Essentially, if somebody squeezes the supply of oil, we could have tried to go to a Nigeria or a Iraq or Iran or somebody else. In this instance, for example, what is happening is you cannot really move away from China, because even though they do not control the entire supply of, say, rare earth or germanium and gallium, to be, talking about the latest incident, they control the processing of 60 to 90%. And this is something that we all discover each day, the kind of interlinkages that we have with the rest of the world, for the rest of the world with respect to China, is going to be extremely slow and painful process, right? And what does it mean for us in terms of supply chain resilience? It cannot be a one-shot. We know of these terms called jhatka and halal, right? With China, it cannot be a jhatka sort of a divorce. It's going to be, like I said, the Indian divorce. It's going to be a halal kind of story. We cannot antagonize China. Nobody can. And we'll have to find ways of moving away. So when you talk of the future, whether it is green energy, whether it is digitization, all of these will find that somehow some of these supplies are coming from China because they control the processing. So either the intermediate or the raw material or the rare earth, the interlinkages are huge. And therefore, supply chain resilience will have to be very tactful about it. We can do the PLI, we can do the manufacturing, make in India story and all of that. But we'll have to try and find allies who think like us, right? Friend shoring, you mentioned that. And we'll have to sign some of these FTAs with like-minded and partners who think like us, right? It could be democracies, non-democracies. But the point I'm making is simply this. If we are investing in future growth, and if growth is going to come from, growth is going to be greener, if growth is going to come from digitalization or digitization, there is no way other than being a partner of like-minded countries and sources, and at the same time, not trying to make a jhatka sort of divorce with the Chinese. We'll have to be very, very tactful, and we can continue to work on some of the things like cost of doing business, ease of doing business, trying to do some of these reforms wherein we become competitive enough, try to get linked to the global value chains, because we still haven't. And just, if you can just stop here, maybe. So if you look at, just go back. Go back, please. The other one, the supply chain.
Mr. Manoj, I hope you're there. Is it in slideshow? Or?
Okay. So it doesn't matter. Okay. What is happening is, at the time that India is trying to grow, and everybody's talking about India's decade, India's decade, or India's century, the world is closing down for business, right? So there is a slide in there which shows the number of restrictions countries have started to impose on imports of goods and services, right? So when we try to send our software guys abroad, there are restrictions imposed, visa and some of those restrictions are imposed. And therefore, we'll have to navigate this very tactfully. We'll have to invest at the back end in terms of reforms, in terms of ease of doing business, cost of doing business, work on things like PLI. Yeah, this one. So if you look at the left-hand side.
Pricing restrictions.
Yeah, just look at the number of restrictions that have gone up over the last 10 years. And more importantly, the champions of global trade, which is the United States and the Western European countries, even they are looking backwards now. They're going back. They're looking at industrialization. So it is becoming more make in America, make in whichever country, right? And therefore, it's very important that we recognize the changing trends. The champions of globalization are looking back, and the Chinese are retaliating. And therefore, we have to be very, very tactful in navigating these future trends. So when it comes to supply chain resilience, we will have to bake these in our calculations and be mindful of the reactions of the Chinese, as well as try to be in sync with like-minded economies and their policies. Thank you.
So thank you for your clarion call on the calibration front and to be watchful. So coming back to the whole issue of the global debt and how countries are, literally struggling with the global debt burden. But as we know, the global debt figures in 58 rich and emerging economies are supposed to have jumped to $298 trillion, which is 342% more than the combined GDP of these 58 nations. So you can imagine, what kind of impact it has. And world's interest bill has gone up by 13 trillion each year. The servicing of interest. We are talking about a 1993 trillion economy. In that, 13 trillion contributes to only interest. Okay, so and it is rising and it's hovering around 90 trillion mark now. And the tragedy is that, if you look at the UN report, it says that a country struggling for this kind of even to service their debt is going to extremely find it difficult to, invest on developmental resources, or when we talk about, green resources or sustainability related, about sustainable development goals, wherein we have, all those goals to be achieved. Where are they going to find the funds from is a question mark, isn't it? So, somewhere along the crushing debt phenomenon is literally punishing, more than about half of the world. Countries in the world rather. Okay, so how this is going to pan out, and how, obviously we are seeing a big impact in the markets also because of this. The developed world is able to raise the resources with much lesser premium, whereas the underdeveloped and developing countries, the premiums are going up because of the way things are affected. So how do you see these things there as a fallout? The debt to GDP ratios are rising in many countries. They're finding the interest bills are rising, and do you find cascading effects of that in the markets also? So what's your view, Dr. Vijay Kumar, on this?
Yes, you are right, Dr. Krishna Kumar. This is becoming a very serious issue. Even pre-COVID, this debt crisis was a major issue. But then the pandemic aggravated the crisis. The fiscal stimulus provided by the governments to manage the pandemic alone added $45 trillion to the global debt. So the interest burden, as you rightly pointed out, that is becoming a $13 trillion of interest payments a year, puts the sustainability of the debt servicing in question. Of course, there are two parts to it. One is the debt which countries owe to themselves, which they have borrowed from within the country, which is India's case. And there are multilateral borrowings also. But then many emerging economies of the world have borrowed from China. And unfortunately, we don't have a global financial system to address the problem. When there is a balance of payments crisis, well, countries can go to the IMF for a foreign exchange bailout. But then for this global debt crisis, there is no global financial arrangement to mitigate the problem. So when the debt is very high and the interest payments are very high, the opportunity cost in terms of the lost expenditure on important items of expenditure like education and health will be impacting the economy very hugely. Even in India, India is not in a debt crisis, but then in India also, if you take the public expenditure of the government of India, the largest item of the government's expenditure is interest payments. So when interest payments rise, well, you'll have to make sacrifices on other expenditure, particularly on education, health, infrastructure, etc. So that is an area of pain. But then, as I told you, there is a geopolitical dimension to that also. There are calls for addressing the problem at a global level, but then many countries have become indebted because of China's geopolitical ambitions, the Belt and Road Initiative. Pakistan's case is a classic case. Sri Lanka also belongs to that category. So that is a geopolitical dimension of this debt crisis. It is not yet unsustainable for many countries, even though the debt burden, as you said, is more than 300% of the combined GDP of these 58 countries. It can be sustained for another 10 years, perhaps, but then it will have this impact on in terms of the opportunity cost through less expenditure on other socially desirable expenditures. Then coming to the particular point that you have mentioned regarding the IMF, many countries going into IMF, well, this has to be seen separately. Our neighbors, including Pakistan and Sri Lanka, and also Bangladesh. Bangladesh economy is doing very well, actually. The growth rate has been very impressive. But then the foreign exchange crisis has become an issue. And that is why all these three countries, Pakistan, Sri Lanka and Bangladesh, have approached IMF for a foreign exchange loan. But India is sitting pretty there because we don't have a balance of payments issue at all. We have this $596 billion of foreign exchange reserves. So this country is approaching IMF has to be seen separately from the larger issue of the public debt, which is becoming unsustainable. And it calls for an international, global initiative plus geopolitical initiatives also coming from China, but I don't know who can build the Chinese cat. We don't know.
Thank you. Thank you for clarifying on that, sir. And for the participants, we are also opened a few polls wherein we were asking questions in Mentimeter. You might have got it in the chat box. There was a question that what is the rate of growth at which Indian economy can grow without having a problem? And many of them seem to be telling that it is around 6%. In fact, we have given a choice to at 4%, 6%, 7%, and 8% plus. So hardly anyone has taken the 8% plus bet. So broadly, it is hovering around 6 to 7%. So that is the kind of the poll results which we conducted of all the people who are tuned in this program. So thank you for that. We'll be having more such polls coming in. So please answering. I would request the participants to watch the chat boxes. Our people will be posting those next questions. We have about 8 to 10 polls which will be happening alongside as we discuss. So please, keep posting your, by taking part in the polls. Coming back to Dr. Sachidanand, talking about supply chains initially, we need to also talk about the various capex push, including the big capital capex push schemes of infrastructure, nature, Nari Shakti, and all. So these things have all helped largely. The capex push India could maintain even now. Everywhere you find that there is a huge construction activity going on, and somewhere along these is when we are talking about resilience, we are also talking about being infrastructure led. And unfortunately, this has been a nemesis for long as far as India is concerned. And there has been a capex push in last year budget. The kind of allocations the capital expenditure has taken is huge. And also the investments on various things like railways or, common facilities, including into agriculture and so on and so forth. So how do you see this resilience aspect, resilience theme getting addressed when you're talking about the infrastructure-led or capex-led growth part of it?
I think it's very important to recognize the issues that come with debt-led growth. Right? We have seen the developed world commit that mistake. What they've resorted to is an equivalent of the helicopter money or the printing presses, and this bails you out of trouble in the short term, but creates its own problem. At the same time, they have been fairly strategic with what they were trying to do. In the sense, I think in the morning we saw how inflation is a friend of governments who are trying to inflate their way out of trouble when it comes to debt to GDP, fiscal deficit to GDP, because if you are able to inflate the denominator, the numerator starts looking better. And some of these variables are always seen, analyzed in nominal terms. So there is a bit of strategic leeway that they've enjoyed, and even the likes of IMF has given them a license. And there was a paper, in fact, you can look it up, saying that they can continue doing that. I mean, pursue this strategy till 2026 without having a major problem in terms of debt sustainability and things like that. But what it did was it did give them inflation headache, which we are seeing the Fed really fight very aggressively against. They've raised interest rates dramatically, more than 500 basis points in almost 12 months time period, which is almost unprecedented, barring that 1980s Volcker shock. So that is the tactical and the strategic part when it comes to the West. When you look at India, I think there is a growing realization within even the state governments that the quality of expenditure is important, and you need to create sustainable infrastructure, right? So the central budget you alluded to, I think it was a rarity, and I think we did speak about it. 4 years in a row, the capex to GDP ratio has gone up, and the rarity is it has not happened in the last 50 years. So that's how rare it is in the Indian context. Typically, the focus is always on consumption, stimulus, or revenue expenditure. So no 4 years in a row in the last 50 years, we have seen this ratio go up. So the central government has recognized that we need to up the infrastructure spending significantly. And therefore, in the budgetary allocations, you've seen 20-25% YY jump, right? And then this has now been happening, like I said, going up 4 years in a row. Second, and more important, because any infrastructure that you build happens in a state, right? So the central government can come up with policy guidelines, it can allocate funds, but the infrastructure creation happens within the state. And I think we are beginning to see a sea change in the attitude of local politicians or the state politicians as well. They have begun to see it beyond that ribbon cutting and the typical show business, right? So they've moved beyond that. And I think that's good augury for us, because if you look at what is the center doing and what the state governments are now beginning to do, and also the pandemic has woken up politicians all around the world in terms of the importance of spending on softer infra. So hard infrastructure, China has made it very fashionable, right? Everybody is trying to do China. But now people have started to recognize that you need to invest in the softer infrastructure story as well, which is the health, education, and all of that. And when you put this together, I think you have a very powerful story ahead. I do believe that irrespective of some of these free buys that will keep coming and going, and these are a fad now, but I think the infrastructure spending story is here to stay. And this is going to make the India story far more resilient. We have created a lot of infrastructure in the last 20 years, but that is nothing in terms of what we are going to see in the next 20 years. So I'm talking about hard infrastructure, digital, as well as the software infrastructure.
So coming back to Dr. Vijay Kumar, So talking about infrastructure story and then talking about balanced regional development, that is what all our governments want, and the economic disparities to be lessened and so on and so forth. In the economic parlance of it, you still find that a lot of interstate and inter-district disparities exist and are in fact stark in many states. And you will also find that this per capita gross value added and all becoming problem, including health indicators or social economic statistics or even GST realizations for that matter. So all this is putting, though the ultimate goal could be, kind of balanced regional development. We are still a long way off that, and obviously it does connect to the migration part of it to the larger cities and cities bursting at seams. Not that a flood is required to make it burst at seams, even without that as well. So all these are becoming bugbear oftentimes, and the government is finding it challenged. So how do you see this inclusive and less disparity driven, I would say, the resilience to be looked at, and where do you see India going in that, on that planks?
Before I respond to your question, Dr. Krishna Kumar, let me say that I am very glad to hear from Dr. Shukla that the CapEx story has come to stay, and particularly his remark about 4 consecutive years of CapEx GDP growth, that is very, very, very significant. And that is precisely the reason why Larsen & Toubro shares is one of the best performing stocks in the Indian stock market this year, right? And as a long-standing investor in L&T, I am very happy about it. So thank you, Dr. Shukla, for that.
So incidentally, a lot of infrastructure companies, most of them are doing extremely well, all flush with projects, isn't it? So they all thank Narishaktis of the world.
L&T is among the top 4 performing stocks in calendar year 2023 after a long period of lackluster performance. And this also is a market's way of signaling that we are on the cusp of a capex cycle. And normally when a capex cycle happens, it will last at least 4 to 5 years. I hope Dr. Shukla agrees with me on that. Now, coming to your question on this unbalanced regional development concern that we are having. Yes, it is a major concern. If you take the per capita income or the social development indicators, whether it is in education, literacy, female literacy, gender justice, health attainments, there is huge inequalities, and that is certainly an area of concern. And also economic growth also. If you look at the manufacturing story in India now, the manufacturing, the investment and the manufacturing that is happening, it is confined to 6 or 7 states among the 28 states. True. Manufacturing is happening only in 6 or 7 states: Tamil Nadu, Karnataka, Andhra Pradesh, Telangana, Maharashtra, Gujarat, and Haryana, I think. And of course, backward states like UP are now making a big comeback, but then the rest of the country is not participating as they should in this manufacturing growth. So that is an area of concern. The question is, how do we address that? There are no simple solutions. Simple solutions. Formerly, we had this reservations, government-led reservation programs for category A, B, C, etc. And that kind of capital expenditure direction policy did not work well. And one way of addressing this inequality is through finance commissions, and finance commissions have been doing that. Look at the allocations to states like the Bimaru states, as they were formerly called, not Bimaru now, many of them. For example, UP is a state where a lot of things are happening, particularly on the infrastructure front. In the Finance Commission awards, major part of transfers are going to UP, Bihar, Madhya Pradesh, Jharkhand, and states like that. That is one way of addressing this unbalanced regional development. But then the ultimate solution for the problem will be for these states to attract investment on their own. Attracting private investment, foreign direct investment as much as possible into the backward states. That is the only permanent solution to address this problem.
Thank you, sir, for clarifying on that. And I'll take the discussion forward with Dr. Sachidanand. And I guess we need to discuss the resilience part when it comes to no economy can think of in growing terms only when you deal within your country. So obviously the externalization or India's internationalization actually matters. Isn't it? So, and the initial remarks, Professor Vijay Kumar was also referring about how India, when it was not exporting, it had always, had issues with the GDP growth. Now, when coming to the, resilience part of it, you know that the external sector has been pretty not consistent, isn't it? You have in some quarters exports going up, then some issues. Initially it was all COVID related, health related, and such other issues, supply chain related issues, geopolitical issues. Issues keep different, and now a lot of recession has also gone into it, isn't it? So somewhere along the consistent, export or external sector performance is not, leveraging India to lift itself up. And how are we trying to address these things, in the whole scheme of things, especially when we want to be 5 trillion and 10 trillion kind of economy going forward? And how from we talk about PLIs, we talk about, we need to also know that MSMEs more than 50% are export oriented. So where does that comfort come from when it comes to resilience? When they don't have orders, what resilience are we talking about?
Okay, so let me give you an example. I'll walk you back to say 2022 and 23.
Okay.
The world, like Dr. Vijay Kumar said, was struggling for growth. Barely any growth anywhere. I mean, barring some resilience in the US economy, and there people have been guessing which quarter are they going to finally bite the bullet. But having said that, look at our neighborhood, and you started off by pointing out that nearly 50 odd economies are really struggling because of debt and such issues, and then struggling because cost of dollar, availability of dollar funding has dried up. Now, in the same time when Sri Lanka was looking around for funds, Bangladesh approached IMF, Pakistan was going around with a begging bowl. An Indian company called Mahindra sold $2.2 billion worth of Scorpios in 30 minutes, right? And this, so I mean, this is an exaggeration in terms of an example, but this is just to bring out the complete contrast that we are seeing in terms of the resilience of the India story. This is something that I said in the boardroom at Mahindra. When you look around, the kind of problems that you see countries facing, and I think Dr. Vijay Kumar made a very important point, we need to understand that well, is that India's growth has come without compromising on macro stability factors. That is the most important thing in a crisis time like this, right? Or when you're trying to come out of a crisis.
Have the basics clear.
Yeah. Exactly. And that tells us that we are doing some things right. When it comes to the trade part, Dr. Vijay Kumar mentioned the 22% drop in goods in the latest numbers. But if you dig down deeper, the numbers are not so bad. So I'll tell you, the services export story continues to remain resilient. Even on the goods part, the core goods segments. So if you were to adjust for the bases and all that, and we did speak about how bases have become very problematic, whether you do a YOY or a QOQ analysis. But if you were to adjust for that, in the core segments, we're still doing fine, right? So that is the near term or the latest numbers. But going forward, I think we are beginning to do the right thing. And I spoke about the germanium and that example from China. We are beginning to make friends in the right geographies. So a prime minister going and getting getting an award, the highest say civil award, etc., is not so much about a photo opportunity. It tells us that we are beginning to do the right things at the right time. So when the world is moving away or looking away from the Chinese, we are investing in those relationships, right? So the Prime Minister goes out and to the Muslim world, to the developed world, whichever part, and he comes back with something tangible. I think that is very important. That tells us that without these partnerships with like-minded people and without FTAs, right? So we cannot think of a, say, decade or a year where we do not have the right sort of FTAs or agreements with larger economic blocks, right? So if I'm selling manufactured goods via PLI or Make in India, or I'm trying to export my services, it cannot happen that I'm not part of these larger blocks. So I think there is a lot of work going on. The Commerce Minister was in UK for that FTA. It has been in the making for long. We are trying to do the same with the Europeans.
Harvest agreements also on the cards.
Yes, with the European Union, with the Americans. These are not going to be easy, but the point I'm making is we are trying to do the right things. So this is on the external part. Internally, like I mentioned before, getting the logistics cost down, right, to single digits from 13, 14%. Trying to do some of these reforms. Yes, some got rolled back, say the Tamil Nadu example that we saw. But I think even the state governments are beginning to realize that they will need to compete for investments, right? So state governments are going out and competing for a Tesla or a Foxconn, and then these guys are giving them what they want. I think these are the kind of things that will create this resilience. So foreign trade, by definition, is going to be much more volatile, right? Because you are dependent on external demand.
The way the geopolitical situation is placed,
Yes.
and how with the failure of WTO things have become FTA driven and so on.
Absolutely. And also there are geopolitical shifts happening.
Yes.
There is a certain failure on part of institutional arrangements like the WTO and all that. And we are at a very interesting juncture. And therefore, I think investing in these global relationships, getting our act together on some of these reforms, and trying to shift consciously by way of giving subsidy. You can haggle about whether or not $10 billion subsidy makes sense for semiconductors or not. But the point is, we are at least trying to do the right things. Some will work out, some may not. But net, as long as we are able to do the external and the internal bit right in a coherent manner, and we don't walk back, right? I think this is another critical issue. If we don't shoot ourselves in the foot by committing mistakes like the taxation error that happened during the previous government, and then we don't really walk back, don't renege on contractual obligations. We saw a certain state government really renege on the contractual obligations in the southern part of the country, right? And we should not be doing these. So while we are doing the right things, it's equally important that we don't commit the mistakes that we've done in the past. If we do that, I don't think there is going to be a major issue in terms of India clocking $1 trillion worth of exports by, say, 2030, 31, 32. I mean, give or take a year doesn't really matter because the global situation is very volatile. But I do think we are doing the right things. And if we take care of the basics, don't shoot ourselves in the foot, we should be able to clock that $1 trillion number.
Thank you. Thank you for clarifying on that element. And, I would want to see some more polls being posted in the groups. So our team will be posting a lot more of polls. So please, whatever the results have come, you can show it in the this one also. I guess there was a lot of related themes what we are discussing aligned to that questions are there, so we can show it in the screens. Coming to the good that Dr. Sachidanandan talked about 1 trillion economy, the export led part of it. So it's also, we are also talking about 1 trillion to come from digital led economy part of it. We all know that from Y2K era onwards, when India saw an opportunity, today, we talk about India's decade. By mere tinkerers of softwares, we are now the architects and designers and producers of tech platforms. In fact, we are so much. When we talk about India-US relationship, we said it is America-India to signify AI. So, and to land on August 23 in the South Pole of the moon, we are actually dependent on AI to help us, both the communication between lander and rover. We want that to go smooth, so that we will have the wonderful experience of landing in moon, the same place where there was a glitch earlier. So much is the stakes that we have placed on deep tech technologies, artificial intelligence, algorithms going forward. So India has come to there is the saying that it is going to be India's decade going in the next 10 years or so. And how the whole thing, wherever, whatever massive scale of this one we are talking will have an Indian finger in it when you talk about the tech part of it. So how do you see this 1 trillion economy to be coming from the digital-led initiatives in the world, and what kind of resilience that will give India going forward, sir? And you can connect it to the market part of it also, because since you're also a market analyst on more of tech companies, you can see how it goes. Over to you, sir.
Well, I'm very glad that Dr. Shukla has emphasized investing in global relationships part. I'm very glad that he emphasized that, because this is one point which is not widely appreciated. It needs to be appreciated, because the contribution from the political decision making, by building the right kind of relationship, right kind of friendship with like-minded countries, the democratic bloc, as opposed to the totalitarian bloc, if I may put it that way. That is paying rich dividends. And our Prime Minister's initiatives in this direction are actually, it can't be quantified. It is great. Because in the long run, it will help us to take off, like Chandrayaan has taken off beautifully. The Indian economy also will take off because of this building of global friendships in this world, which is becoming increasingly polarized into a democratic bloc and a totalitarian bloc. So India is in the right place, and our friendship will pay us very rich dividends, no doubt about that. Coming to your questions on the digital economy and the 1 trillion exports, of course, all these are achievable. I was watching, I'm not an expert on technology, artificial intelligence, machine learning, etc. My depth of knowledge is rather superficial. Therefore, I will not go into those domains. But I will just say that I was myself surprised when I watched Nandan Nilekani's presentation on India's digital transformation. He gave some data. It was mind-boggling. He said Aadhaar is used now 80 million times a day. 80 million times a day, Aadhaar is being used for authentication. And that is a remarkable achievement. And we know that in digital payments, our digital payments system is the best in the world. 260 Indians use the UPI platform. And the digital transactions in a month is now around 7.3 billion transactions. And we are told that the goal is to make it 1 billion transactions a day in the not too distant future. And with the kind of technological innovations that are happening in the UPI system, well, the day is not far when these goals can be achieved. And if you take the whole of India stack together, along with the UPI, the JAM, and the ONDC, that is doing a world of good to the Indian economy. The JAM Trinity, Jandan Aadhaar Mobile, that has ensured a very viable and efficient social security system. When the US wanted to do fiscal stimulus and send paychecks, send not paychecks, send checks to the US citizens, they were sending checks through money orders. I mean, through the post. Whereas in India, we were crediting our Jan Dhan accounts virtually on a real-time basis. And the US itself applauded that. When they used the old system, we were using the modern system. Thanks to Nandan Nilekani, we could do that. And we know the ONDC, the Open Network for Digital Commerce, is helping our MSMEs in a big way. You alluded to, Dr. Krishna Kumar, the role of the MSMEs in their contribution to GDP, employment generation, and also to the contribution in exports. So ONDC is helping them in a big way through facilitating marketing and also through credit access. State Bank of India will be too happy to lend to the MSMEs now because the credit information, all these are available on the fingertips. Coming to your questions on the markets, the tech part of the stock market, I'm glad you asked that question. I'm sure even though we are running short of time, if we have time for the Q&A sessions, my previous experience is that people ask questions on the stock market and the trends in the market because most people are investors in the market now. And people who have invested in PSU banks, particularly State Bank of India, now are laughing all the way to the banks because formerly PSU banks were not doing well. Now in 2022, the PSU banks were the best performing segment in the stock market. Now let me make a very important point as far as stock market performance is concerned. Right now, we are having a global rally. We must understand this. The rally in the stock market is not confined to India. The rally in the stock market is a global rally. S&P 500 in the US is up more than 18%. NASDAQ is up 42%. I am talking about year-till-date figures. Euro stocks is at 52-week high. Germany has dipped into recession, but the German index DAX is at 52-week high. Japanese CAC is at 52-week high. In South Korea and Taiwan, their markets are at 52-week highs. In India, both the Nifty and Sensex are at lifetime highs. There is a difference between 52-week highs and lifetime highs. Right? So we have a global rally in the market. It is important to understand why this global rally. The reason is very simple. The markets erred last year. Markets made a mistake. Markets make mistakes. But then the good point is that the markets very quickly corrected. The markets corrected last year. For instance, NASDAQ corrected by 30% in calendar year 2022, anticipating a US recession by mid-2023. And if a US recession happens, naturally, corporate earnings will be impacted. And when corporate earnings are negatively impacted, the stock markets also will be impacted. And the stock markets are a discounting institution, are a discounting mechanisms, and anticipating this global slowdown, if not a global recession, and a US recession by mid-2023. Stock markets corrected last year, and this rally that we are witnessing now is damaging, compensating for, if I may use that expression, compensating for the damage done. It's repairing the damage done in 2022. The damage was overdone. The fear of a global recession and a US recession was overdone. There is no recession in sight as far as the US economy is concerned. And that is why the stock markets are doing well. And coming to technology stocks, tech stocks were the drivers of the market in 21-22 calendar year. In 2021 financial year, pharmaceuticals did well. Sectoral churns always happen in the market. 2021, it was pharmaceuticals thanks to COVID. In 21-22, it was technology stocks thanks to the digitization. 22-23, it was the PSU banks particularly. And now we have, I would say, a capex-led growth where stocks like Larsen & Toubro, our own great infrastructure company, and companies like Cummins, companies, many other companies in the infrastructure space. So this capex-led growth is getting reflected in the market also. So I want to repeat this point. What we are witnessing now is a global rally, and it is not a tech-driven rally. If you take the year till date performance of the top 50 stocks, Wipro and Infosys has been till last week. Wipro and Infosys has been in the worst performing five stocks. Worst performing five stocks, in spite of Infosys being the bellwether of India's IT companies and a great blue chip with a tremendous track record of wealth creation. And when there is a global slowdown, and particularly when the slowdown is very conspicuous in the advanced developed countries of the world, their tech spending will decline, and their tech spending, when it declines, naturally the exports of computer software to these developed countries of the world will decline, and that is why the performance of IT companies during the last couple of quarters has not been good. This quarter also, if you look at the results which have already come, HCL Tech's results and TCL's results, they were not good. They were expected, but then the markets, they were expectedly poor, but the markets always discount things in advance, and therefore that's why they are recovering now. So you have one more comment about the markets. Now at Nifty at about 19,600, I have a little bit of a concern that the markets are running slightly ahead of fundamentals. From the short-term perspective, if you look at the FY24 estimated earnings, Nifty valuations would be about 20. I'm talking about the PE multiple. India's PE multiple is about 20 now. And if you compare it with the long-term average of 16, we are certainly not fairly valued. We are a little bit expensive now. From a mid to long-term perspective, if you're talking about India's $8 trillion economy in 2032, of course, we can say that Indian markets are very cheap. Or even from the 2025, 26 perspective, valuations may be attractive. But I don't know. I don't think markets will discount things 3 years from now or 4 years from now or 5 years from now. Markets will discount only what is likely to happen in the next 1 year or so. So from the very short-term perspective, markets are a little bit running ahead of fundamentals, but the market is now driven by liquidity. It is a bull on liquidity steroids. In the first 2 months of this year, in Jan and February, foreign portfolio investors sold in the Indian stock markets to the tune of 32,000 crores. But in the last 2 months, May and June, they have bought stocks for more than 86,000 crores. And in June also, till yesterday, they have bought more than 30,000 crores if you take into consideration the bulk deals and the investment that has come through the primary market also. So for FPIs have made a complete U-turn in their investment strategy. In early this year, Jan and February, their strategy was sell India and buy China. Now the strategy has been reversed. It is sell China and buy India. We don't know how long this will last. At high levels of valuations, investors should be a little bit concerned. I'm not saying that the market is going to correct big time, but then at high valuations, some unforeseen event can trigger a correction. Therefore, investors have to be a little bit cautious. I'm saying this comment in response to your question on the commentary on markets. Over to you.
Thank you, sir. Thank you on that good note. How markets are placed in the whole way, including on the tech side of it. We would want to obviously take up a lot of questions from the audience for want of time. So right now it is all open to questions. We'll also wanted to take, there is a poll results which we have conducted alongside which is showing up, how the tuned-in people feel regarding India's growth story sustaining, or how India will be placed going forward. And do you think India's global standing in economics and politics has gone up over the last few years, and so on and so forth? You find how the participants are answering all that we are flashing there. So please, for your benefit, try to understand this is all real time coming from the tuned in participants. So now the floor is open. If you have any questions, I have a few questions to take up with the panelists, which I'll do, provided there aren't any questions. But I would, now in the chat boxes as well as on the people who are physically present here, if you have any questions, you can post it to either to Dr. V.K. Vijay Kumar or to Dr. Sachidanand. Both you guys. You can switch on and ask your question. Yeah, that is already on. Go ahead. Go ahead. You have any questions?
Yeah, it's like not for the present or future, but it is only concern like after going through all this present economic condition. There's one question is sitting on my mind.
Okay.
When China has made everything, like all the world globe as dependent on China till present now. Why that globe is watching China? Why they are not prepared anything?
Okay, you have an answer for that supply chain related question. So when all your germanium, what we were doing is what you essentially asking.
I'll try and answer that. I think we need to recognize globally, the Western economies, the leaders of the global economy, thought that if you let in an economy like China, they will become like us. So that was the predominant thought, right? If they are working with us over a period of time, they will have capital market oriented or capitalism inherent advantages will force them to ape us, right? They will mirror how and what we do. I think the thinking has been completely wrong. Why did therefore the governments of the West or the leaders of global economic, leadership tolerate that for 2 decades? I think the answer is simply any business, it is about costs and profits, right? What the Chinese integration in the world economy via WTO did was it brought down the costs of everything that was manufactured in the world. So if you look at right from toys to things that go into a mobile phone or a semiconductor, whether it is high-end chips or something like toys and footwear or whatever else is manufactured, the world began to realize, the Americans and the Western economies, the cost part of the equation went down dramatically. So cost of goods went down because the Chinese became a part of the global network. And cost of services went down because India's services exploded after Y2K, right? So they enjoyed the fruits of the costs collapsing for anything that they imported. And this led to the 20-year plus tolerance of Chinese policies. Remember, there was something called as Tiananmen Square that happened in China, Beijing. Something like that, if some other country were to do, even today, the world will not sit like that, right? They will react. But those days, the Americans did not. And the West did not. The Europeans are very quick to comment on things like that. Even they kept mum. So to my mind, these are 2 reasons. One, the thought process was that they will become like us. They did not, clearly. They have their own model. They're very proud of it. And there are now questions being asked in those same economies. Why shouldn't we work like the Chinese? Why shouldn't we use the Chinese model for certain things, even growth, right? So these are the discourses, and the world is now gone back on the globalization part. There is a huge backlash that is happening to the same economies and politicians because they allowed the Chinese to really walk away with the booty.
Although they're communist.
Right. And it was so the unlikeliest of people. It got somebody like a Trump to do that, to point out what was so obvious. Nobody else was really willing to do that. The Germans and the Europeans even today are dithering over how to cut the umbilical cord from the Chinese, right? So there is a big discord between the Americans and the Europeans on how to tackle China. And this allowed the Chinese to get away with murder for such a long period of time.
Thank you. Thank you for answering that. And I'll take one more question. This is on AI. One gentleman by name Suresh, V.S. Suresh, is asking, what is the present status of the AI industry in India, and how can India align its AI initiatives to accelerate economic growth? I would want you to answer.
So I think this is something. So AI, to my mind, is not the only novel thing that has happened to the global economy. Over the decades, multiple things have come up, right? So the mainframes and the PCs and the laptops and the mobile phones. So technology is something that is ever evolving. True. And today it happens to be AI. Tomorrow maybe it is gene cloning, right? Who knows? And then the way technology, the pace at which it is working, I think it is very, very important that we stay abreast of what really is happening. Okay. Now the trick is, how do we integrate whatever is happening? So I'm not just talking about AI. It could be anything. How do we integrate it in the economic output, in the processes, right? I mean, so for example, you're talking about $1 trillion worth of exports. Yes. How can we use AI and things like that to better our processes, right? Clearances, government regulations, how can they be tweaked so that nobody is really able to game that like the Chinese have done? So I think it is very important for us to realize that technologies like these will keep coming and going. The thing is, how ready are we? Second, how do we integrate these? How do we make it a parcel of our economic output, thinking, and regulation? If we are able to do that, it could be something else tomorrow. We will be on top of it. We'll be able to maximize the gains, and at the same time, really be very aware of the harm it can do. So, for example, an economy which is labor surplus, like India, this could very well take away a lot of jobs at the bottom end in the services segments. And how do we minimize the damage? So yes, there is that opportunity. How do we integrate ourselves better? How do we maximize output? And how do we lower our costs, raise the margin, raise productivity? But at the same time, we need to be very aware of the damages or the pitfalls if it is not really supervised, regulated, or integrated very well. Sure.
Just to add on, so I was talking about the integration. I'm reminded to think in the past few weeks, there is a videos in circulation in LinkedIn of the world where the AI, a drone, actually picks up the apple. It actually profiles the entire apple, whether it is ripe or any insecticide is there, or all parameters which is set on that, and then it is plucking it and coolly taking it, in that where in the truck it is going. It is a totally mechanized way of it. Now, just imagine the same thing how we are talking about now that you have a tomato issue selling at 150, 200 rupees. If we had, our farmers were using this kind of technology by integrating it, and at the right time, if your tomatoes have been picked, before your unseasonal rains or, before the crushing, heat or things like that, maybe our mandis would have been full with tomatoes. You would not have had, armed guards to send a truck with the tomatoes, which goes, which carries only tomatoes. So there has been a lot of hijack incidents. Obviously, I guess you know about it, isn't it? So that is how. So how are we going to integrate? A is simply a technology, but how are we going to integrate, including into our ways of looking at it? Whether it is a farmer who's cultivating apples or oranges or tomatoes.
So just to add, I didn't really find tomatoes in the menu here at SBIL, so I think they're using AI.
Mr. Raju sir is watching that. Thank you so much. So, I mean, there are a lot of questions. So, want of time, I want to skip, or rather, we have answered it in certain other ways. So, we may not be able to take up all. Is there any question from you guys?
Yeah,
Please, please.
yeah, one more, sir.
Yeah.
Two questions, couple of questions. One at a macro level, which interests our Indian
Please,
economy
please.
as a whole and all.
Yeah.
And the other one is specific to our banking fraternity.
Okay.
We have been discussing right from morning, the delinking, decoupling of the dependency on the China at one level, and we're also talking about green energy.
Please.
Okay. Green energy essentially is about the battery make and all is about obviously lithium, cobalt, and nickel and all, and it's a single use batteries and all. We know it is cannot be used multiple times. And the kind of what the reports are saying is the green energy is not is green enough.
Mm.
And the dependency again, and the one who is controlling globally is China again. Okay, the reserves of this lithium and whatever we're talking about. So is it that are we getting entrapped into that kind of a stage where we are again depending on the China when we are heading on the green energy? That's one question. And coming to our basic, as being a banking friend, I would like to understand. See, this financial, uh, all the media is saying Indian banks are at epitome of amidst a global crisis and all in terms of resilience and all. Okay, my doubt is, and enough of Qs are saying that we are all-time low on NPAs and all, and we have adequate capital and all these things. But again, there's a strain on the other side when the CASA deposits are at a costlier, when we have to indicate on that one. How do you see these two contradicting points, and how do you map? And our interest would be what do you see in the near future, the fight between this low cost funds and the high rate of interest on the loans? Because the center keeps, I see that center wanted always to lower the rate of interest on the loans. It has dropped down, increased the basis points quite a times, but in the recent one, they didn't touch it up. But it is always on the, checklist that it has to be increased further. So how is that? How do you see?
Okay, nice. So, understood. So, I think the first part you can possibly answer it. Then the second part I would let Dr. Vijay Kumar answer. Sure. Yeah.
So I think on the Chinese supply chain, I mentioned about how it is becoming very, very different and very unipolar in the sense, the OPEC example, right? If you remember the OPEC shock, uh, all these countries came together and they controlled or cut output, and prices started to move up dramatically. There, you still had some options, right? You could play an Iraq versus Iran, and you can buy from Russia, and you can use UCO Bank at times to route the payments and stuff like that. There's still some leeway. But the way the future growth, the sources of future growth, or the color of growth going forward is going to be green. Somehow, we have ended up in a scenario where the last 2 decades, people turned a blind eye, and the Chinese have been very smart about it. So while we were busy changing governments, they were busy plotting, playing chess, right? So they have plotted every move for the next, say, 20, 30 years. And we are just still haggling over who should be the president and prime minister in democracies. But I mean, that is a scenario that people have now recognized. And therefore, these alliances, right, the Quad, these are not just necessarily military alliances. This is not NATO and Warsaw happening again. These will have elements of global trade and supply chain integration, right? They have not really put that in the documents in black and white. But please remember, the way things are evolving globally, everybody knows that every single critical thing for green economy, renewables, EVs, you name it, at this point in time, it is somehow either originating from China, or the intermediates or the processing industry is in China. So there is no two ways about it. This is why you saw Janet Yellen go to China just last week and prostrate in front of the Chinese premier, right? So the Americans, the Europeans, and I alluded to the divisions between these two, the Europeans and the Americans. The reason why they're not able to take a hard stand is simply the interlinkages that you have with China. What can we do? We will have to look at the whole supply chain thing. You would have seen just last week, the government come up with a list of critical minerals. So we are beginning to think now, and they've already done it, but it doesn't matter. But this is a good starting point, right? Also, when it comes to, say, the EV part, nobody knows whether it's going to remain lithium ion, right? So the Japanese, if you look at the automakers, the Hondas and the Toyotas are playing the hybrid game. They're not going down that battery path, right? The lithium ion. And for the Indian energy mix, it is always going to be, so we cannot really choose because we have paucity of these. So we'll have to do CNG, we'll have to use gas, we'll have to use little bit of lithium ion in EVs, and we'll also have to use hybrids, which is why on Indian roads, you'll find it a very unique way. I mean, you look at vehicles around you, these are running on petrol, diesel, CNG, hybrid, all sorts of things, and batteries, right? So two-wheelers, three-wheelers are going the battery way. And there is no option. I think this is the best way for us to develop that resilience. Once the technology is clearer, and nobody, mind you, knows, not the Japanese, not the Chinese. The Chinese have been smart in terms of just thinking 10 moves ahead. But the point is, even they do not know which is the eventual technology. Otherwise, everybody else would have had those mines and everything under their control, right? And therefore, this economic war between the Chinese and the Americans has intensified. So there is already a world war going on without any arms. It is in the tech space. Who controls the technologies which will give you momentum in terms of growth, sustainable growth? I think that's the war that we are seeing. For us, we'll have to be very keep our eyes open to all kinds of possibilities, all kinds of technologies, because see, getting something like AI or these lithium ion batteries or some mines in J&K doesn't solve the problem. You have to, your industries, your user industries have to really get integrated. Your consumers have to be in sync. So the whole ecosystem, and that takes time. So we'll have to do all of that. But in the meanwhile, I think we'll have to continue what we're doing in the auto industry, right? Every little bit of everything.
Oh, but answer. So over to you, Dr. Vijay Kumar. What of time I thought can be brief.
I'll be very brief. The concern of the questioner that NIMs can be under pressure is justified because deposit rates have been going up, and the NIMs are under pressure now for the banking industry. But that is going to be having only a marginal impact because capital adequacy is at very high levels, much more than the Basel norms requires, and the NPAs are at the lowest level in decades. And the credit growth also is impressive. Last year, the credit growth was around 17%. And banks have been passing on this increased cost to customers also. Therefore, the hit on the profitability of the banks will be very low. I was watching the Q1 results of HDFC Bank, which came a few hours before the HDFC Bank, the standalone HDFC Bank results. The results are very good. And of course, one point that has to be kept in mind is that the large banks, both in the public sector and the private sector, will be totally unaffected. They will be doing very well. Smaller banks will take the hit as far as net interest margins are concerned, unless they improve on their CASA ratio significantly.
Thank you so much, sir. And I guess we are already 15 minutes past our allotted time, and we have time to only take closing remarks from the panelists. So I'll take it to Professor Vijay Kumar, sir. We have been discussing about the resilience part in terms of our economic outlook of the Indian economy. And, when you gaze into the future, what are the three major actions which the policy makers have to focus on concerning the resilience part of the Indian economy? If you could put some sense on that, it would be nice for the larger audience.
Well,
As a closing remark, yeah.
yes, Dr. Sachidanand Shukla, I'm very glad that he emphasized this point, not much appreciated point, this political dividends from establishing very good relationship from the Prime Minister, who is going the whole hog in that direction. And he is doing that. He is doing that. And let's hope that he will continue to do that for an extended period of time. Then some reforms that we require badly are regarding land acquisition, and that there are political obstacles there because last time, when the government enacted a bill for land acquisition, the political response from the opposition was "Soot boot ki sarkar." So, there are political issues like that. We need to reach a consensus on that. I don't know whether consensus is possible, particularly in a very noisy democracy like in India. The third is the states have to improve a lot because at the state level, the central government is doing a lot in terms of reforms, but at the state level, the opposition to reforms, particularly from the bureaucracy and the entrenched vested interests, opposition is very high. Recently in Kerala, we had this instance of one of Kerala's top companies, the Kitex Group, going away from Kerala and investing 2,000 crores of rupees in the first phase in Telangana, creating 20,000 crores of 20,000 jobs in Telangana. It's a Kerala company because they were driven out by the bureaucratic political elements. So state governments, if they are to address the problem of slow growth and unemployment, well, they will have to implement reforms at the state level. These are some of the important areas which need to be addressed.
Thank you, sir. Thank you, sir. Sir, I'll take as part of closing remark. We know that when we talk about the sustainable development goals, yeah, the report has also come recently, and India doesn't have a great standing there. So we have a lot of areas to work on, be it on the economic parameters or on the social parameters, including skilling. But now India is an young country, so we have a whole lot of so we talk so much about the young part of it, powering us, but there is a skill element part of it, the employability part of it, and so on and so forth. So, what do you think are if you were to achieve a much better ranking in the SDG part of it? What are the three major things that we need to focus on?
So I think the best part about talking last is that everything else has been covered, and Dr. Vijay Kumar has covered it very well. But I can still have the last word. I would say that if I have to think of some of the key things that we still need to do, we haven't paid enough attention to, I think is reform in the judiciary. And Director, you will agree with me. We were having a discussion about this, and you had very strong points over there. Reforms in judiciary, police, and administrative capability. I think these are not in sync with an economy that is aspiring or about to reach 5 trillion or 10 trillion or whatever. These are lagging behind. We need to do something about it as of yesterday, right? Not tomorrow. And these are big impediments to an economy that is growing fast and that is going to become very big. The other point that I think is not very well appreciated is we haven't invested in things like R&D. So if tomorrow's, going by the questions that we've got, everybody's talking about AI or technology or EVs or things like that. I think as a country, the government, whether it is center or state, they don't really invest as much as is required, nor does the corporate sector. So I think the private players, entrepreneurs, all of them, and then the governments should be investing much more in R&D, and these will give us a big leg up in terms of our competitiveness and productivity going forward. So I think I can probably stop there.
Thank you so much. Wonderful discussion, and I'm sure that you had a lot of takeaways. I thank on behalf of the State Bank Institute of Leadership, the two panelists, Dr. V.K. Vijay Kumar and Dr. Sachidananda, for also giving a wonderful insight on various themes that we discussed. Plus, for answering all the questions posers, both online and offline. And what has been wonderful, a group of cohort of participants here, plus whoever could join today, tuned in, 100 plus people, in the virtual part of it also. We thank each one of you. So please keep connected. We'll be conducting lot more of programs this year. We have just started this financial year. This is the first, hybrid format discussion we had on this theme. So, as we always say that whoever who is going through the portal of State Bank Institute of Leadership, we will be getting the invites for many of these kind of discussions on topical themes, on highly relevant issues. So please keep connected. So whatever the feedback you have, you can leave it in the chat box. We have a research team which goes through that, and then you can also suggest themes, whatever you want us to take it up in future. So on behalf of the institute, so a big thank to our directors are also for completely glued to it for the entire duration of it, and all my faculty colleagues who could join this particular program. Thank you, one and all.
Thank you.
Thank you, sir. Thank you very much.
Thank you. Thank you, participants. Thank you.